Investors and traders, welcome to the channel. Today is 5th of October 2024. Hope everyone is having a great start to the weekend. We will take a quick look at some of the key markets. We'll start by taking a look at the US dollar index. So last Friday we had the non-farm payrolls come out, and they were towards the stronger side, and this is something we were anticipating in terms of the US dollar, because it was right at a very key support level around here after completing our targets, and we have seen a pretty good rally come in the US dollar over the course of past week. Now it's approaching the 38.2% retracement of the 107 levels, which comes around 102.62. And the market closed at 102.24. So this is going to be a pivotal point. I think it's likely to actually go and touch it, and from here we'll have to see whether the market turns from here or the market is strong enough to actually keep on moving higher. One possibility is that it could do something like this, and then there is a little bit of a retracement, and then we could see another move higher. That would be actually pretty bullish for the US dollar if this kind of scenario were to take place. So again, watching the 38.2% retracement around 102.62 really carefully. Now moving on to the treasuries. So let's take a look at the shorter end of the curve. There we go, a very strong move to the upside in the 2-year note. So the yields are higher now, around 3.92%. And now the interesting thing is, after completing our patterns right here, the market found support coming in from the 24th of March 2023 lows. So here what we are looking at is basically the market retracing pretty much the previous move it had done. So there's a market symmetry in it, and now the key will be whether this market actually is going for the 382 of this entire run, which comes around 410, so 4.10%, which will take it around here. So this is what we are looking at. Looks like the yields want to go a little bit higher to around 4.10% on the shorter end of the curve. And I believe this is because of the big move we have seen came in last Friday. So because of the non-farm payroll being stronger, and the unemployment rate went a little bit lower, this has actually pushed the case that Federal Reserve might actually proceed with a smaller interest rate cut. So maybe they might do just quarter points. And of course the bond market is actually reflecting that. And now if we take a look at the 10-year, so through the eyes of the futures chart, we can see that this is the big move. And the really interesting thing is that it comes after completing this ABCD. I was of the opinion that we still have a chance. That, let me show it to you on the weekly chart. We could actually tap into this 38.2% retracement, 118.21. But it looks like this market wants to go and tag a little bit lower. Here maybe around 111.22. It remains bearish, and of course this rally has been in a bear market rally thus far till it breaks above the 38.2% retracement, in my opinion. But what we are watching for is if the Federal Reserve, they have started with their interest rate cutting program. So we are likely to see rallies come in, but of course the price action is actually telling us the otherwise. And then on the 10-year 30-year bonds, we can see a pretty strong move to the downside, broke below this trend line. I was really hoping that this trend line would actually provide support, which it did for a few days, and then just 3 days ago provided signs that it was actually moving lower. So what it is doing now is actually here we go, really interesting, where this market has actually closed last Friday, is completing this ABCD pattern. So I would expect support to come in, and of course it is right at the 38.2% retracement as well. So this is a pretty strong pattern which has actually transpired. Okay, I think I am not drawing it correctly, but it's gonna be something like this. Here we go, and then another one. Here we go. That's the pattern that we are watching. Let me change the colors if I could. Choose something like maybe orange. There we go. So this is what we are watching now. As a 122 being a pretty strong support level. Support coming from the 30-year. I think that should also influence the 10-year note. So we could see some rallies coming in pretty soon actually in this market, which should be good for the interest rates to start to move lower, or yields begin to move lower. Now let's take a look at gold, because the gold has been really interesting. I think gold in itself deserve a special report itself. What we have seen is gold actually trade sideways last week, and it just remains strong. But also you can see that it's stuck in this range ever since it completed our big pattern of that ABCD around the 2700 mark. So this is really interesting in terms of gold, what it is doing. And silver is also you can see that it has it's a little bit stronger than gold, and there's still a chance we could hit 33.85, maybe 35 as well. So this is what we are watching in these markets. A really quick update, and then on Sunday there's gonna be another update for the US stock indices, and then also we'll try to cover sectors as well. So as always, take care of yourself, and if you like our technical analysis, then please subscribe to the channel and give this video a thumbs up as well, and speak to you guys soon. Good luck and good trading.